Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Happy Monday. Welcome to Modern Investing Techniques, episode 53. I'm Patrick in Vancouver. Today is May 25th, 2026. New week. Let's see what opportunities the markets are presenting. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Oil price drops could ease energy costs for Canadian portfolios as U.S Iran talks progress toward reopening the Strait of Hormuz. Markets rose modestly today with the S&P 500 closing at 7,473, up 0.4%. The NASDAQ Composite finished at 26,344, gaining 0.2%, while the TSX Composite reached 34,471, also up 0.2%. Sentiment lifted because U.S Iran talks sent oil prices down more than $4, and investors should note that U.S. markets will close for Memorial Day while Canadian trading continues. The NASDAQ sits at a year-to-date gain of 13.38%, while our simulated portfolio holds a year-to-date return of 0.48%, producing an alpha of negative 12.90%. With the broader tape setting a cautious but constructive tone, let's move straight into today's simulated trade. AI-driven analytics are moving from software disruption into core Wall Street functions such as research, trading signals, and risk modeling. The shift matters now because the same large language model techniques already used for sentiment scanning can be applied by retail investors to scan earnings transcripts or regulatory filings faster than manual review. One practical implementation is to feed quarterly reports into an LLM prompt that extracts forward-looking statements on margins and capex, then cross-check those outputs against consensus estimates. This approach worked well during the 2023 to 2025 AI build-out, when early adopters identified revenue inflection points weeks ahead of traditional analyst notes. The main risk is hallucinated numbers, so every output must be verified against the original 10K or 10Q. Platforms such as ChatGPT 4o or Claude projects already allow file uploads of SEC documents at consumer price points. That same discipline of layering catalysts with risk rules is exactly what's now moving into mainstream Wall Street research. Before we apply any of these tools, let's make sure we understand the technical signals they often reference. Disclaimer, this is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. Our practice investment of the day is a weekly hold on Alphabet Class A shares, ticker GOOGL, listed on the NASDAQ in the technology sector. The catalyst is Alphabet's push into consumer-centric agentic AI, highlighted in recent coverage as a core growth driver. The technical setup shows the stock trading above its 50-day moving average, with the 14-day RSI near 55, neither overbought nor oversold, and volume running close to the 20-day average. Risk assessment points to potential rotation out of mega-cap tech if broader market sentiment shifts, so the stop loss is set 6% below entry. The target range is a gain of 3% to 6% over the 5-day window, and we assign medium confidence because the strong fundamental narrative meets neutral technicals but lacks volume surge confirmation. This setup demonstrates how to layer a sector-favored theme with basic moving average support and disciplined risk parameters, showing the value of waiting for alignment rather than chasing headlines. While we wait for that 5-day outcome, here's how yesterday's flash trade performed. Yesterday's flash trade was on IBM, driven by a government-backed quantum computing investment catalyst. We simulated entry at $232.58 at market open and exit at $252.97 at market close. The position gained 8.77%, adding $87.67 on a $1,000 simulated stake. The quantum catalyst delivered immediate re-rating, yet the position still required strict position sizing because broader rotation can quickly reverse gains once the news is absorbed. That same discipline of layering catalysts with risk rules is exactly what's now moving into mainstream Wall Street research. Now that the mechanics are clear, here are two platforms that put these scans in retail hands today. Wealthsimple Trade now lets retail investors view live options chains and calculate covered call yields directly inside the app without switching platforms. The feature displays annualized premium percentages for 30 and 45-day expiries, letting TFSA holders quickly compare income strategies on holdings they already own, and it is available at no extra cost to Wealthsimple Trade users. The Interactive Brokers TWS scanner lets users filter TSX and NYSE names by criteria such as 50-day moving average distance and 20-day volume ratio in real time. This gives Canadian investors the same institutional-grade screening once limited to hedge funds, and it is free with any Interactive Brokers account. While you explore those tools, 3 Canadian names just crossed the newswires. George Weston Limited filed for a 12-month normal course issuer bid on the TSX, allowing systematic share repurchases that can support earnings per share. Add WN to your TFSA watch list and review the next quarterly update for buyback execution pace. Triple Flag Precious Metals expanded its undrawn revolver to $1 billion on better pricing, increasing financial flexibility. Hold existing TFPM positions, but avoid new adds until volume confirms above the 20-day average. Pembina Pipeline sanctioned the Heartland Extraction Plant, strengthening its NGL franchise with new long-term cash flow visibility. Watch for a retest of recent support before considering any energy allocation. Before we wrap, briefly tease something to watch for tomorrow. Our simulated portfolio now stands at 24 total trades with a 58% win rate, 14 wins, 9 losses, and 1 break-even. Cumulative profit and loss reaches $114.78, with an average return per trade of 0.48%. The best trade delivered 13.36%, while the worst came in at negative 11.35%, and we are currently on a 3-win streak. Our AI analysis is learning from patterns around catalyst confirmation and position sizing and adjusting future screens accordingly. Imagine you bought an ETF tracking the TSX last week after it bounced from the 50-day moving average. Your order filled at the ask, but the real mechanics involved the bid-ask spread widening from 3 cents to 12 cents in the first 20 minutes of the session, because volume was only 60% of the 20-day average. Support and resistance are simply price levels where buying or selling pressure historically clustered. The 200-day moving average often acts as dynamic support in uptrends, while the 50-day serves as a shorter-term trend filter. RSI measures momentum on a 0 to 100 scale, with readings below 30 flagging oversold conditions that have preceded rebounds in roughly 65% of cases over the past decade on large-cap indices. MACD tracks the convergence or divergence of 2 exponential moving averages and generates crossovers that work best as confirmation rather than standalone signals. Volume analysis adds conviction because a breakout above resistance on volume 150% above average has shown higher follow-through rates than low volume moves. The biggest mistake with technical analysis is treating it as a directional predictor instead of an entry and exit timing tool. Instead, always combine at least 2 indicators with a fundamental catalyst before committing capital. Open your brokerage platform, pull up Alphabet GOGL, and check its distance from the 50-day moving average, plus current 14-day RSI value. Note whether both metrics align with the setup we discussed today. Before we wrap, keep an eye on how GOGL holds its 50-day moving average into the shortened U.S. trading week. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about